To Sophia's point, I want to throw up this chart taking a look at the Golden Dragon index. Every single time over the past year that it's tried to test that 50-day moving average, it's failed to break higher. So does this really tell us that the market and investors are still wary of calling a bottom when it comes to the regulatory uncertainty?
I think that's definitely right. I think there are a lot of uncertainties around the regulatories and policies. So we mentioned that from the U.S. side, we face the delisting risk. From the industry side, from a policy point of view, domestic policy seems to be tightening the internet names. Given that internet names have a very high weight in the index, I think we have reasons to worry that there's still certain uncertainties around these sectors. However, I want to say that despite the fact there are uncertainties, despite the fact that I think a lot of companies may have to revise their earnings a little bit due to the COVID situation, these companies, first of all, are very robust in terms of operations, and they're very strong in innovation as well. The second point is really about valuation. You can see that the valuation of these internet names are at very low level. So I think long-term investors can be a little bit more optimistic about the future outlook and start to accumulate when stock price really have very big movements.
What about the longer-term outlook when it comes to property? Is there going to be more consolidation? And also, we haven't really seen more supportive policies come through for the industry.
I think you're right. I think some investors are disappointed by the fact that we haven't really seen fiscal and monetary policy supporting the real estate market. However, I tend to believe that this is the darkest moment for the real estate market and developers. From a fundamental point of view, you see sales declining, you see delays in payment of the debt, and you see the delays in disclosure of their financial numbers. We do see certain news about cities relaxing, for example, buyers' restrictions on the property market. Hopefully, we will also see rates going down, which will definitely support the demand from a leverage point of view. So I think it is almost at the darkest point. If we still think that the Chinese government wants to hit a 5.5% GDP growth, I think relaxing the property market seems to be the right choice, and things can potentially improve from now on.
Really, the relaxation, though, not happening on the COVID zero policy side of things. The understanding now is that given how it's being tweaked a little bit, that perhaps consumers will take a hit, but not so much industrials, manufacturers, where we are seeing more of that closed loop system in place every time cities go under lockdown. How do you really play that into your market strategy?
Yeah, when we are looking at the case zero policy, for example, in Shanghai, we do realize that most of the activities stop for about half a month, and potentially that could be extended to another 7 days or slightly longer. So the direct impact is about half a month to a month of lack of activities. However, given that Shanghai is not a major manufacturing base, the impact of from the manufacturing side or export side could be less than that. However, we also see other cities, start to adopt the same policies against COVID. So the impact of manufacturing and export will be seen in the later months. But if we compare the situation with the same situation in 2020, for example, March 2020 is also a very weak month. However, given the recovery and the monetary and the fiscal support, we see recovery very soon. So I think it's really depending on what we will see as the policy as well as support side.
What we saw in 2020 as well were those stay-at-home trades doing very well. I'm talking about gaming, entertainment, and so forth. Are we going to see the same now that we're seeing more lockdowns across China as well?
Yeah, I think that's definitely true. You can see more activities for online entertainment. You can see more usages of online conference calls, for example, given that most of the people are staying at home, and the purchase of grocery, purchase of staples are definitely increasing. The supermarket businesses are recovering as well. So I think what you saw in March 2020, first quarter 2020, will be seen this year as well.